All right, so today we'll be doing financials and we'll starting with the P3 also today. So before starting, we need to understand what is expected from the financials. In fact, through management case study also, you'll have some kind of financials, operational case study also. Everywhere the relevance of finance is different. For example, in management case study, they will be asking questions on reportings. So we have to look from the reporting standards and everything. And in strategic case study, we have to look at financials from our role. I've already share you the exact role. When you're writing the pre-scene summary, please write about your role also. That 6-7 role what is given in the CIMA exam blueprint. Okay. So what we have to look from the finances when we are making a strategic decision, when we are talking about a special project, when we are talking about any issue in the company, it should be relevant to the finance. And there won't be any calculation, but these numbers are important. Let's say a company is making very good profit, okay, and we have extra money. I'm just giving a scenario, and you want to go to a new market. So when you go to a new market, you have two options: either to acquire certain business or start organically. But you will see 90% of the scenario or even more, any registered company, registered means those who are doing business for long time, they'll go for acquisition. Why acquisition? Because acquisition will save a lot of time and energy, though it will be little costly, but it's worth it. Otherwise, if you do it organically, it might take years and there is still chance the company will collapse. If you see in the real world also, most of the industries, the company will do the same. Why? Because acquisition is easier, right? So we have to see the finances. Do we have the finance to invest on that? It's a very common question. Secondly, here we'll be looking at some decisions what we'll make. For example, how much debt should be the part of finance or how much equity, debt versus equity. Again, these numbers you have to put in. Then a very important strategy decision is about the dividend. How much percentage of dividend we are giving in. And we don't know the previous year's dividend. That also is actually a problem, but we need to compare this to our competitors and maybe real world competitors also. That is another important thing we have to look in the financials. Third and the most important is the gearing. What is the gearing? Debt to equity ratio. How much debt we have and how much equity we have, right? The more debt we get into the business will become riskier. Then when we have a questions on debt to raising finance, then you can talk about the gearing ratio. Okay. Then next thing we have to look on the sales or revenue, how it is growing. Then we have to see what is the industry standards growing, and the best thing is to compare with the immediate competitors. Therefore CIMA will give you, I mean, they have in fact given one of the competitors, and every time they give data, they give for 2 years. Why 2 years is important? To see in comparison. Let's say now our 2023 sale till December is 16,840 million $. But how we know that it was good or not? We have growth or not? We can compare to the 2022. Then only we can understand, okay, it was good. But imagine if we don't have 22 data, then it will become difficult. So we have to see in comparison also how things have gone up. And simultaneously, we have to look at the different cost. Sometimes our revenue will go up by 5%, but the operating cost can go by 10%. So in that case also company is not doing.
Here a question. Sir, like there is the competitor information is giving, and if we are writing means, then in that case, like we are writing the revenue of, just giving an example of Saefwell is 16,840, right?
Okay.
And means instead of giving example of competitor here, whatever means is mentioned here, right? We are giving, for example, we are giving example of Securitas,
Yes.
yeah. So
Yes,
we
yes,
can give
correct.
like this example, but how we would get to know that they are aware that that okay, for Securitas this is the revenue, or else we should give the comparison of the same company which is given in the pre-scene.
Okay, so basically, as far as number is concerned, it's good to give the same pre-seen companies example, because if you compare number to the real world, it can be little confusing. Okay, other examples you talk about Securitas, G4S, Prosegur should not be a problem. First point. Second point to your answer is they won't ask you direct questions on numbers. It's very rare. They'll ask you questions on
We would give
strategy.
just example
Yes,
that
yes.
yes for this so that its company is growing like this. So,
So one suggestion to you to make it easier, if you are giving examples for revenue, give with the pre-seen company, because in the real world you will see a lot of difference. Let's say Securitas is saying their revenue is 147,000. So here we don't know what is the currency they are reporting in. Let's say US dollar, but now we don't know how much is B dollar. And if we compare B dollar, let's say equal to US dollar, then again we'll see, okay, we are doing very less,
yes,
because
this
we
is
are
a big
second largest
thing.
company in the world. And if you compare to the second largest company, our revenue is very low, right? You should be very high when you are the second largest in the world. It will not make sense. So don't try to put logic everywhere. As far as number is concerned, compare to this. And in all other areas, you can compare to the real world companies. Okay? Because numbers won't match.
Mm.
And obviously, CIMA cannot copy their numbers and put here exactly for the companies, because they'll also have issue with copyright and a lot of legal things. Ultimately, it's just a fictional country. Oh, sorry, company. Okay? And don't worry about the examples and all. Once we start doing questions, once you are confident with that, every scenario we can get an example. My request to you to is read more and more, read the pre-scene, and read the company's website, read the company's annual report. You'll get a lot of idea what they are doing, and try to make notes of it. If you just read, you'll forget. Try to make notes, make a personal note on industry, on the pre-scene, on the risk, pestle, SWOT, separately. Then we can combine it. Okay.
Yes, sir, I read for two, three companies for Securitas, G4S, as well as
Great.
Prosegur. Yeah.
Are you writing also?
Oh, yeah, I made means notes, but not no, those notes are not like that. Even I am not able to understand sometimes because I have written just few things.
I would strongly recommend you, Pooja, write in MS Word, because your writing skill need to be good for the exam. You need to be quick.
Mhm.
You need to be fast. There are
Right.
students who are very good in communication, verbal communication, but when it comes to writing, they are struggling. And if they don't write, they will not pass. Simple as that.
Okay. I will write then at least one thing daily. Yeah.
Yes. And secondly, I have planned we'll do one session completely on industry only, industry analysis. We are working on our own notes. We'll share with you when it's ready, and we'll discuss in the class completely. That time you can bring all your examples. It will be a discussion class. Okay.
That sounds good, sir. Mhm.
Everything is planned. Just I request you to do the step by step plan what we are doing, the analysis and everything. Will not leave anything. Okay. So let's get started. So first with the revenue, many times they will give a data about what is the growth in the industry. Okay. For example, the industry growth is, let's say, 5%. Then we have to see how much percentage there is growth in our business. For example, uh, just 1 second. I got some number. The global security service market was valued at
Sir,
7.5.
for comparison, sir, a question for comparison. Yes, we should give the means the same company which is given here. But if we have to give like this, that the growth in the G4S is 20%, like we are giving example, and the growth in our Saefwell company is 22%. So we can give like this example also.
You can give any example, no problem. But
Mhm.
don't just give. I mean, when you're writing, just don't say that, okay, we are not the second company. So don't try to be go against the fact that I have mentioned here. That's what I'm trying to
Mhm.
say. Any
Right, right.
example you can give. Okay. Now, what is our growth? If you just divide, you'll get the growth. Our growth is coming around 6.4%, 6.38, right? So 6.38 growth on 22-23. Please do this ratio. This is very basic. Okay.
So you are doing 2694 divided by no two six
16,840
nine four
divided by
minus
15,830.
2 what, sir?
16,840
Okay.
divided by
Divided by
15,830.
15,830. Okay, good. It.
6.38 percentage is the growth. And if you compare this to industry analysis, which we'll be doing later on, the industry growth is expected to be 7.5%, and we have got around 6.4. So this is a good point. It's a positive thing for us. It's a strength that we are able to grow almost similar to the industry. Usually what happened when the company grows, I mean, if you're already at maturity stage, so the growth will reduce. If industry average is 10%, we might grow only at 2, 3, 4%. But now we are growing at 6.4, which is good. How good it is, we also need to compare to our competitors. Okay. I'll share this finance analysis also once it is done. But now I want you to do the basic calculation. Next is operating cost. Again, operating cost is gone up. If you look at the percentage, you don't need to mention all this in the answer. This is just for our understanding. So it has gone by around 5.75%. So almost same. Okay. What happens now? The operating cost, as we know in the basic of finance, will have fixed cost and variable cost. So when the revenue goes up, many times our operating cost also goes up. So for any business, it's not good to have a lot of variable cost. It's better to have some fixed cost so we can reduce our operating cost, and ultimately our operating profit will go up. Because usually bank will look at which profit? Bank will be looking at operating profit. Why banks will look at operating profit? Because from there only their payment will be done. Are bank interested in our net profit? No. So if you are raising a loan again, we have to show to the bank, okay, we have grown at, let's say, 9%. How much percentage is the growth? Oh, divided by almost 9.8%. Okay. So this is a positive thing. And with this, our ratio with bank will also increase. What ratio? Basically, how much is your finance cost and how much is the available money. How much times you are able to service your debt. Like in this case, how much is the finance cost? So finance cost is your debt. It can be different types of debt. And how much money you have to pay the finance cost? 2,694. So how we can do is 2,694 divided by 200. So we can service the debt how many times? 13.47. This is pretty good. In fact, when we are raising a loan, the bank will have covenants, promise saying that you should be service it at least 4 times, 5 times, 6 times, depending on the scenario. If you have given collaterals, how big the loan is. Okay. Then once the financial cost is that will get our gross profit, and there is an increase in gross profit, and ultimately the expense. Tax expense is obviously uncontrollable. We have to pay the taxes. This is also an advantage for us if you are paying good taxes to maintain the relationship with the government. However, certain companies
So,
might use.
question. Sir, what you have done, like you did it 200 divided by 2694. So this is which ratio? Just coverage ratio.
Yes,
Oh,
interest coverage ratio.
okay. So we should do by net profit. We should do interest coverage by operating profit. Okay.
Operating profit, because you will pay out of net profit or operating profit.
Okay. Out of operating profit, yeah.
Yes. Actually, we have this ratios in F3, the first chapter of F3. I'll share this with you so you can also calculate and make a notes of it. Here we have the basic formulas. Can you see? So these are the things. This is just for understanding. Okay. Profitability ratio, lender ratio, investor ratio. So here what they are talking about is every individual will look at different ratio. For example, somebody is a lender, let's say a bank. So bank will look at their gearing first, debt to equity. Bank will look at interest cover. What we did now was the interest cover ratio. Interest before interest and tax divided by interest payable. They look at debt ratio. And for example, shareholders and others will look at profitability ratio. What is the gross profit margin? What is operating profit margin? Return on capital employed. These things are never asked, but just to understand how we are doing financial.
Sir, but we can write these things. It means not all the ratios, but few ratios we can write. Yes.
Yes, it's good to write. For example, you are raising, there is a question in exam that shall we go with debt or equity? Okay. And you are recommending that Saefwell should go with debt. So in order to justify your answer, you can say our interest cover ratio was more than 13. Even if you take a massive loan now, the interest cover ratio will be healthier. It will be about 10, 11 only, right? Secondly, we have a lot of collaterals in property, plant and equipment that can be used to get a better interest rate. You can put the number like this, you can see. Even in the same answer, you can talk about the gearing. You can say our gearing is still good, and we can go for it. So as a fact to justify your answer, you can use, especially you can use gearing, interest cover, dividend. These are basic. Okay. Then investor will look at different ratios: earning per share, price earning ratio. We might not have all the information to calculate all these ratios, but whatever we can do. Dividend yield, dividend cover. I'll share this with you. Okay.
Okay, sir.
In fact, I'll get you all these ratios also from the familiarity kit. We have familiarity kit, but you just do some basic and try to do on your own. Then only you will remember in the exam. If you calculate what does it mean, okay. Even the analysis, everything is there. But if I give you directly, you will not read and you will not remember, because doing this will take hours. And when you spend time, then only you'll remember. Then only you will understand this. At least for our company, we have to do computers. If you do basic analysis, also is enough. But for our company, whatever possible analysis should be done. Yeah. So we are talking about the tax expenses. Paying tax is good. If you see as a stakeholder analysis, what government expect from a company, they expect us to follow all the compliance and regulation. They expect us to pay indirect and direct tax. Obviously, if you are paying higher taxes, government is happy because that is a primary source of income for them. So if there is any problem with the company, if we need government support, we can say we are ethically paying all the taxes, we need some support, and government might do. And we have seen in COVID times, government have been bailing out a lot of companies. In fact, a lot of airline companies in US and all were bailed out by government. Okay. However, there are certain companies which can be a little bit unethical, but they are finding like loopholes to reduce the taxes. Transfer pricing they are using, or sometimes they acquire a company which is loss making. If you acquire a company which is loss making, you can save the tax. Ultimately, the number will reduce. If you are paying like 399, and if that company's loss we reduce, let's say 50, again it will come to 349. So the net tax will be reduced. That strategy can also be done to see the decline in the tax. Okay. Now going on to the statement of changes in equity. So we had an opening balance. Obviously, we are not doing business this year. We have been, previous years closing 2020 December also. So opening balance was 500 million. Retained earnings. What is the retained earnings? Whatever the business have been doing over the years. Another thing is important here. Maybe you already know. Retained earning is not equal to cash, and profit is also not equal to cash. Cash we'll see in the balance sheet, but some students will say, okay, if we need, let's say, 2000, okay, we have 2893 total. If you get a investment worth of 2000 million, or let's say even 1000 million, you cannot just say that, okay, we'll use from the retained earnings. Retained earning is not equal to cash. Retained earning doesn't mean we have that money, it's just on the paper, but we might have invested. Then we use different accounting standard, let's say accrual based accounting. We might have not received the money, but still we'll say and report that as sales. All of you clear with this point? Yeah. If you want to say to use retained earning as an investment, you can say, okay, we have this much number. From that, if it is possible, we can use, let's say, 20-30%. It's possible company might have a retained earnings as a cash. You getting the point? Yes, no?
Yes, Mr.
Because financing related questions can come and you can easily say use retained earning. No. Even if you have, let's say, 10%
But
of
sir,
this.
I think in the notes it was written that in case of internal sources of finance, we can use retain earning the first thing
Yes,
directly.
you can use as the first thing, but you have to see how big it is, how much the number it is. Sometimes you might have the exact number available to fund that, but the problem is you need to keep some money for emergency, for liquidity of the business. Let's say you are doing credit. When you are doing B2B business, credit is normal. It's very rare companies will pay you advance or everything. And if your customer goes out of bankruptcy, goes out bankrupt, what you will do if they don't pay you on time? This is all part of risk. I hope you are adding this point. If there is a failure, credit failure, what you will do? That thing also need to be considered. Therefore, as a safety, we need to keep some money with the business. Okay, so retained earning, if you talk about opening balance for the last year is 2067 and profit for the year is 2095, which has gone up. How much percentage we have seen increase in the net profit? If you just do 2095 by 1892, almost 10.7%. That's a decent growth. Okay. And out of that, we have paid 1869 as dividend, which is quite high. Usually companies pay how much dividend on percentage? Can you tell me? Across industries. If you have invested in shares also, you'll understand. And in general, what do you think? Hello, Nikhil and Pooja.
Sir, I have not that much idea.
Just normally, how much percentage companies will pay?
Mm.
You can just Google and see also.
Yeah, Google I can do.
Okay, check.
Fifteen to 25. Is that?
Sorry, Nikhil.
One second. I thought it's a higher amount. I said 15 to 25, but it's not that.
This is a general knowledge, but you can just still do. Any number you got?
Is that 15 to 25?
Right. We can say that because most of the companies will pay around 15 to 25, and some might pay up to 30 also, but that's rare, right? But it's very rare you will see companies paying more than 30% as the dividend. Why? Because we have to keep money for the retained earnings. We have to keep some money for the investment. Then we have to keep money for bonuses and so many other things. However, what we are seeing here is little bit weird. How much we are paying? Just divide this 1869 by 2095. You'll get 89.21 percentage. 89. That means we are paying 90% as the dividend. Can you imagine? Is it even not imaginable in the real world? It's very, very rare.
Sir,
You'll see
my
some.
guess was correct. Yeah.
Sorry, what was your guess?
Nothing. I said that as I told that the company is giving 90%, so my guess was correct. It's 90%.
Yeah, guess means we can calculate, but 90% is not acceptable. It's very rare. Do you think a company can survive all the profit you are giving away as a dividend? Just think logically. It's not acceptable.
No.
Company cannot survive. Even paying more than
But sir,
30%. Yeah,
our
tell me.
yes, sir. Our competitor is also giving in the same way,
Yes, yes. That
the
may be
same
the reason.
P3.
We'll come to that. That may be the reason. that. But if you talk about finance basic, that is not acceptable. However, if you talk about legalities, company has the power, they can pay 100% also. There have been instances some companies have paid more than 100% also dividend. How they have paid more than 100%? They have used retained earning money to pay the dividends. And there have been instances companies were in loss or were making very less profit, so they took loan to pay the dividends. Why? Because the shareholders are expecting it, or they must be paying dividends every year, so there have been some expectation from the shareholders, or maybe it's their living expenses coming from our company's dividend. Especially if you have pool of shareholders who are, let's say, retired people or just depending on the company's dividend as the source of income. So that might be a lot of reasons, but is it sustainable? I don't think so. Okay. Usually any industry average will be less than 30%. That's very high. Now, what can be the reason of this? They have not given anything. And just like the revenue, we cannot compare this to previous year also. So there will be number of reason. First reason, maybe it is normal in Barland, or maybe we have been influenced by our competitors. Like our competitor is also paying quite high. We'll have a look at it also. Second reason can be this is one of dividend. What is one of dividend? One of dividend means we have been paying every year 2025, but suddenly this year we have paid a very high dividend because we don't have any other profitable investment to do. So companies decided it's better to pay back as a dividend rather than keeping our cash idle. When companies earn profit, they have two options: to invest in some project to keep it for the future, or just give it back. So sometimes they'll keep, sometimes they will give it back, because company also have a dilemma: too much cash versus too less cash. If you're sitting on too much cash, means you're losing opportunity. If you're sitting on too less cash, any problem comes means you don't have money. Okay. So this might be one of the important question for exam, because this is not normal. There might be a question on what should be the dividend policy. And once we'll do our F3, we have a chapter on dividend policy. When we'll be discussing that, your answer should be ready on that. You should be ready if this question comes. This will be my answer. What should be the dividend policy of Saefwell according to you? You can give, all of you can give different dividend policy strategy, but you have to justify it, why you say that. Some of you might say, okay, maintain 90%. Some of you say, okay, bring down to 25 as an industry average. Some of you will say, don't give dividend only. Just keep on investing in profitable projects. All of this makes sense. No problem with that. Next point is currency reserves. As we are into international business, we'll have currency reserves. But currency reserves, actually they are showing, as a negative. This is not direct negative, I would say, because we'll take the closing date. According to IFRS, we'll be taking the last date of this currency, right? Maybe it is just a small fluctuation in the currency. So this can be positive also, negative also. Okay. So totally, if we see our closing balance is 3022. There has been a slight reduction in that. What is the most important here is we have to focus on the dividend factor. And this retained earning number also, closing balance, you can use in some of your answer if you feel like this can be used for the funding. Now going on to the financial position or the balance sheet. Balance sheet, first, the most important is non-current asset, property, plant and equipment. PPE has gone high, right? Actually, it increased a lot, more than 30%, we can say. So usually what happen, if our property, plant and equipment increase, our non-current liabilities also increase. But here it is not. Usually if you buy property, company will use debt as a source of funding it, isn't it? But now I was just comparing, and if you see, there is no change in the non-current liability, right? But still our property, plant and equipment has gone up. And even in our finance cost, there was no increase. So it's a good thing also in a way. We don't know exactly what strategy the company has followed. What can be the reason of this going up? We might have acquired new plant. What can be our property, plant, and equipment for our business? Can you name few for our business? What it can be?
Sir, building, land, and machinery. Yeah, machinery also.
What kind of machinery will be there?
Like we for cyber security, we are using
It can be like
CCTVs.
CCTV camera operations, computers, and
That will not be
or
increasing so much of our. It's in millions. Just because of CCTV, it won't go that. What is the majority?
So building.
Okay, building might be there.
Or,
We might have purchased some property into this group accounting, right? So we are doing for the all 74 countries. That
land.
means land and building. Yeah,
Okay.
and maybe we have acquired vehicles because logistic is very important in this business. And even if you buy some vehicle, let's say you buy a van or car, you have to tailor it. You have to do the uh, bespoke thing, right? You have to make it bespoke according to you. There is almost 33.9 40% increase in the asset. So there might be increase in the vehicles fleet. We might have bought fleets for our employees. We might have bought property, land, like that, land, building. What else? We might have bought equipments, security equipments. It doesn't need to be like say arms or something. It can be let's say even for as simple as fire or fighting with the animals if they're doing in some special location. So a lot of things can be there. However, we don't see any proof what kind of funding we have used, because many times if you compare no in the real world companies, when the pp is going up, the non-current liability is going up, but there is no difference here. That's little weird. Maybe we have used our cash to do that. Maybe we have used our previous year profit to do that. If you see, our opening balance was actually low. Sorry, it was not 5,000, it's 500. Now it's gone to 3,000. Retained earning was still okay. Maybe we have used our cash to do that. That is one reason. Second can be we might have uh, sold some of the shares, or we have raised money through rights issue. What is rights issue? When we are selling the shares, that may be another reason. So we are just trying to speculate because there is no information in that. Maybe in the exam there will be a question regarding this where they'll give you clear information. Then goodwill has remained the same. You see, goodwill might change if the company is not able to maintain the reputation. Sometimes goodwill can go up. Technically it should go up if you're adding a lot of other kind of things into the business. Okay, then intangibles. What is the example of intangible? Brand name, patent, license, all of this will be part of intangibles. So unfortunately our intangible has gone down. Sometimes what happens, you might have same intangibles, the value of the intangible has gone down. Maybe you have patents, let's say only 3 companies have certain patents, but now another 3 companies have also got in the same sector. So there will be a reduction in the intangible. And how this intangible asset is done, we have IS 38 on intangible asset. It tells the company should have a self revenue, and some points are there which we don't need to focus here. Apart from this, it looks good. Overall asset has gone up. That's a good thing. And the best part of especially the PPE going up is it will again help you. If you see till now, our financials is favoring the debt. We still need to see why, because our ratio is good. Debt servicing ratio is good. Second is we have good property, plant, and equipment which can be used as collateral. So you have 2 points to justify now. And we have to do the gearing ratio also to understand how much it is coming exactly. Then current asset. What is current asset? Trade receivable and bank. They have given the basic. Okay, can you give me some example what can be trade receivables for our business? Certain business want to reduce trade receivable, and certain businesses are okay if this goes up, especially if you are B2B, business to business. If your sales goes up, your receivables can also go up. Now we can see that our receivables is going up. That may be the reason that our revenue also goes up. As we discussed in the start, we'll use accrual based of accounting. Even if the money is not received, we have to account for it for this year. Maybe you're getting money after 3 months, 6 months. Okay, can you give me some example of trade receivables in our business? What it can be? Basic example.
Providing safety services to on store or something like that, or reception service for like monthly purpose. So maybe we are just charging them for monthly invoices. So this might be a trade receivable for us, to charging them monthly, and we are giving 60 days or 30-day payment terms. This might be a possibility. Then maybe some special contracts for like 3 months, 4 months, and for those we are taking, like, giving them some credit time period to pay off those. This will comes as a trade receivable, I guess. So
Yeah, if you're giving them credit times, which is normal in this type of business. Okay, what else can be? Sometimes what happen, you might have paid advance salary to certain employees, which is very rare cases. But if you have paid not only salaries, anything you have paid in advance. Let's say you have paid for 2 years subscription of certain service, which you have yet to get the benefit. So technically, the next year expense you have already done it. So now you can account as a trade receivable. And sometime it can be the insurance claim. Getting the point? There can be so many things which can be part of that.
So, as you are saying that we have taken, so that would be trade means trade payable, I think.
We have already paid, but we have not got the service. Let's say you have paid for 2 year service in advance, 2024 and 2025. So you have not get service for 25. So companies can show that at trade receivable. Obviously, they want to show their current asset the best possible way. So for the next year, if you paid in advance, what it becomes for you? Receivables. What is the amount you have paid for next year? That will become a receivable. Okay.
Sir, there, there can be one other example. For example, we are giving services to different client, right? And means they would pay later. Means yeah, same thing. Credit period
Credit
they would
only.
pay. Yeah, means they we have taken the 50% of services, so they have not paid yet. They would pay later on in the end.
Yes. So basically, creditors only is receivables. So receivables, many companies will see this as a risk, because what happened? We have now 1940 as a receivables. So our bad debts can also increase with that. So again, we need to have a risk management. So what companies do as a part of strategy, when they start giving their product or service in credit, they'll see. For example, if I am giving only in cash, okay, direct. Now I said I'll give in credit. So we'll see what will be the increase in the sales. Let's say there will be 30% increase in sales if I am doing on credit. Okay, 30%. Now, out of 30%, there is a chance of 10% doubtful debt. 10% doubtful means out of 30, only 27% I'll get. So now company will see, is it worth to take the risk for 27% or not? If yes, they'll go for the credit. If no, then company will, okay, today's 10%, it can go 15%. So that percentage of doubtful debt will also be different. Best thing is banks. Banks will do all of this, or especially the other financial companies also. However, it's normal now to give on credit to increase the sales. Now, what companies are doing is very cleverly, they are tying up with some financial companies, not technically fintech, but any finance companies. What they do is they'll pay the company in advance and they will recover the money from the clients or the customers. And whatever comes, they'll take 2% commission. So companies is ready to pay them around 2%, 5%, whatever the commission, they will get all the amount in hand. Now that middle company will chase the person for the money. So it's a win-win situation. Company is also getting in hand and customer is also happy, but they might have to pay slightly extra or sometimes the same amount. The company is compromised. So that is a risk management for the receivables. Okay. Then equity, share capital is 500 million. Currency reserves has increased. We have taken from there. So increase means actually decrease. In the negative, we are saying. Why? Because of the transaction. Because of the translation, not transaction. Translation. But maybe next year, if the conversion rate is in our favor, this can become positive also. So when we talk about translation risk, we'll see that in F3 also. Transactions and translation are two different risks. Transaction is when we are making the payment and suddenly the currency reduce unfavorable for you, then you have lost it. That is transaction risk. But in translation, this is just on paper. The transaction has not happened. Just on paper, the value is increasing or decreasing. Okay. So currency reserve is more of a translation risk. Retained earning, we have just copied from there. Then liabilities, there is no change in the liability, 2000. Actually, it's good if the liability reduces for the company. Otherwise, we might have to pay more and more as a finance cost. However, one good thing we have noticed is our property, plant and equipment is going up. Despite that, our non-current liability is still the same. Okay. Overall, it depends on company strategy. If you see what Reliance has done during COVID time, they have got so much investors from so much investment from Facebook and Aramco also from Saudi. So what they are trying to do is they're reducing their debt. In fact, their plan is to be debt-free company. It's very rare, but they are planning to become debt-free company because they don't want pressure from the finance providers. Because when we have this 2000 million as a loan, they will not just give it like this. They'll have lot of complications. If companies, let's say, taking extraordinary risk, they will come and stop because they'll say it's not your money completely, our money is also invested. Then they'll ask you not to pay this much dividend. They can ask you not to invest in this project. You have to give them a lot of information, maybe information for management accountant also, internal information also. They'll have pressure. So some companies are opting to go debt free to reduce the pressure. However, it's a personal decision for companies to companies, because the biggest problem, if you go debt free, is you'll not save money on tax, because tax you are paying after paying the debt, right? You'll pay from the gross profit, and this will go from the operating profit. Current liabilities, trade payables also have increased but slightly higher. Now what came the trade payables for us? Same thing, you might have taken certain service and credit. Now we are providing so much of service, it is 100% sure that at least some of that we might have outsourced, and some of the service which is required for us in business operation in different part of the world, definitely we need help from certain businesses, and again we might be taking credit. So that may be the example of trade payables. Tax liability. Now what is a tax liability? So this can be the indirect tax, or maybe the previous year tax which is still pending to be paid this year, will be the tax liability. Okay, because the dates can be different, and all of this, because we have to pay direct tax also, indirect tax also, and again it can be for different countries. But don't worry, they won't ask you anything on this specifically, because CIMA doesn't include any laws or regulation as a part of the study. Now we can compare this to our competitors. Extract from competitors' financial statement. Brotto Security Group, or we can say BSG, is one of 4 security companies based in Barland that offers both physical security service and intelligence-led service. So this is one of the major company, one of the 4 major companies we can say. Like Saefwell, it focuses on security and does not offer other types of service such as facilities management. Saefwell and Bruto's security frequently compete for the same assignment. They are not doing facility management and we are not doing, but why can't we think of it? Please put this as an option for us. Sometimes in exam you might ask they might ask a very simple question, how we can increase the revenue, how we can grow the business. So you can say we can try for facilities management, because we are operating now more than 100 years. I believe we have so much of contact, so much of experience, so much of expertise to carry out this. We must be one of the pioneers in the industry. Okay, now looking at their numbers, their revenue is also shot up, but it's comparatively very low. Okay, our percentage was coming around 6.4 something, but if you compare to theirs, it's around 5%. Not a very big difference, but slightly lower. But if you look in numbers, we are still better than them. Okay, sorry, 1 second. Operating cost also has gone up, very similar operating profit. Finance cost has remained the same. Just quickly we can check at property, plant and equipment. Oh, if you see here also they have got an increase, and still their finance cost has been same, very similar to that. If you want to look at the bank also, will go. Okay, tax expenses, profit for the year. So what it tells, there may be two scenarios, that one company is making a growth, their revenue and profit is going up, and other company's revenue stands still or it's going down. So that might be a case that they are acquiring each other's customers. So there are two types of growth. Let's say there are 4 companies in the industry in one country. If all 4 are growing, then that means what? The entire industry is growing. Let's say there were 1,000 customers or clients. Now we have 2,000 clients, because industry will also grow, right? And we are expected that our industry globally will grow around 7.5%. So when the industry grows, everybody can grow. Or sometimes what happens, the bigger players will take the lion's share, the biggest share. So now this gives us a 2 advantage. First is the industry in Barland otherwise is growing. We are also making growth, they are also making growth. On the other hand, the another thing can be a threat, because these are also very close to us. And third opportunity can be they can approach us for acquisition, or we can approach them for acquisition, or there may be a merger also. However, the probability is very low. Why the probability is low? Because we are one of the biggest company and they are also close to us. That means that both of us hold a very big market share. And according to the competition authority, if we are having more than 25% of the market share, so that acquisition or merger will not go forward. Why? Because it can create a monopoly in the market. So there is a less probability that we are acquiring them or they are acquiring us, but the chances can be there. Okay. Sometimes they'll say, we want to acquire this business. Who is the stakeholder we need to take care of? Especially if it is BSG, the first and most stakeholder will be competition authority. Because I don't think they will allow this merger acquisition to go forward.
Here a question that how we can say that we are acquiring the means high market share. How we can say?
Because in the pre-scene they have given we are second biggest. If you go back here, they have mentioned, right? Where is that graph? Yeah.
Okay, yeah, that's why.
Here they have given that we are second biggest and this company is third. That means what? If you both come together and assume this Grover Facilities is not part of Barland, and we both are leaders in the Barland. Let's say we are owning 20%, this company is owning 20%. BSG, Broto Security Group. So what will happen? 40%. So there is a high chance government will not allow, because you will create a monopoly in the market. Isn't it?
Yes, sir.
If Saefwell is acquiring this Resumto or this WP Visco Pro, chances are there, or Flodor Safe, maybe. But both of this very difficult. If they are in different country, still possible, but in same country, not possible. I'm not saying impossible, but the probability is very low. We don't know exact market share. But from this, we can get a rough idea, isn't it? Regarding the point?
Yes, sir.
Then, yeah, opening balance was similar to that. Retained earnings 1285, slightly lower than us. Profit is obviously has grown. Dividend, they also have paid a very big dividend. What is the percentage of the dividend? Did you calculate? 1353. So it's coming 86.4%. Out of 1,353 million, we have paid 1,169. That is 86.4. That is also very high. We have paid around 90% and they have paid around 86, 87%, we can say. So that also looks very high, more than the industry average. So there might be the reason that in Barland we are paying this high. First reason. Second reason, maybe this company also did one-off dividend. You know what happened? There might be shareholders who are part of Saefwell also. They're part of this Broto also. Or maybe even if they're not part, if other company is paying, we might have to benchmark with them. Let's say this company have been normally paying around 80% plus. So we might feel pressure to pay that dividend. Otherwise, in the market, people will think, oh, that company is not doing good. Getting the point? So dividend gives signal. There is one theory called signaling theory. We'll discuss in dividend chapter. Signaling theory. Whatever we do will give signal to the market. If you pay high dividend, it's giving signal. If you pay low dividend, it gives signal. If you give zero dividend or no dividend, that will also give signal. And currency reserves, if you see, they have also seen a negative. That means they're also operating, I mean, it's just a guess, but mostly it can be true. They are also operating in the same countries as what we are operating. Let's say we are in some part of Asia, they're also in some part of the Asia and same countries. Therefore, whatever we are seeing on translation risk, they're also seeing that in the translation risk. Okay, can you tell me from a strategic perspective? Okay, first we'll do the balance sheet and then I'll come to that. Property, plant and equipment has gone up. Goodwill remains the same. If you see other intangible assets slightly increase, but for us it has gone down. Maybe there is no problem. Trade receivable has gone up. I think the business model for us is very similar as they have mentioned in the introduction also. Bank has increased. Yes. One thing in bank, what we say is equal to cash. When we say cash at bank means it is a cash and you can utilize it completely. You can recommend that we can use bank. But there is only one challenge. This was at 31st December. And when you will write in exams, it will be, let's say, in May. So January, February, March, April, and May. 5 months have been gone. So this bank amount 786 for Brutto is 5 months back. How much we have? Our bank was very good. So we can still recommend this, but retained earning is difficult. This can be equal to cash, but 5 years back. Sorry, 5 months back. Right?
But sir, we would take into consideration like this is the current situation because they are giving us for 31st December. We can't say like this. I think that for 5 months back, we would say that means the current position because they are
Yes.
giving of 31st December.
Obviously. You know, last year in February exam, we have information for 22 December only. And you are writing exam in 24. Almost 1.5 years gone. Then what you will do? So you can use this information. We don't have any other option. But only thing is, when you're writing, you can be little diplomatic. We had this by the next current year, last end of the year, we have this information. Now we have to just cut it like that. Or we just have to basically take from that. Okay. Because they will close the books in December. And now if somebody is writing in November, for them also, the books will be closed in December. You have to use it, but you can be just diplomatic with the words. That's what I'm trying to say. Equity is same, currency reserve we have discussed, retained earnings slightly increased because of the increased profit. Technically, retained earnings for both the business should go up, but they are not doing it because they are paying so much money in the dividend, so much. Borrowings have been remained the same. Our borrowing is 2000, their borrowing is 2000. Tax payables, sorry, trade payables, slight increase. Tax liability is also increased because of the increasing numbers, maybe. Okay. Not very much difference in both the company. Sometimes what happen, our growth is, let's say, 10%, our competitor is losing revenue 10% from last year to this year, or vice versa. Our revenue is going down and their revenue is going up. That may be also the scenario. Or sometime in one of the pre-scene I have seen, both the companies revenue has reduced to 30%, and that was in 2020 that time. So indirectly, CIMA was talking about COVID because of the COVID. In fact, they mentioned in the pre-scene there was one of situation externally. Because of that, there is a decrease in the revenue in the industry. Okay. Yeah. So my question is, I'm not talking about numbers, just in general, why we should know our competitors' financials? Why your competitors' financial is important when you are making a strategy?
To benchmark with our competitor, and we can know how they are performing and what type of resources they have got. For example, like what cash in hand they have got in them, and for them competitors and all, and what their competitor are earning and all, they will get roughly ideas, and according to them it will give us more idea to how to enhance our activities and operations to earn more monies, and where to save cost to attract more shareholders and achieve the expectation of stakeholders.
Right. Anybody else?
Sir, yeah, I would give an example only. That, for example, our the grocery business and our competitor is reducing the price, giving a lot of discount. Then in that case, if we are not giving, then in that case we would lose because all our customers would go there. As earlier I have given example of milk. So if we are not reducing the price, so here this thing has happened that one company Falcon had reduced the price of milk. Then after 15 days, the other company Park also has reduced the price of milk, means drastically. So in that case, if they won't do, then in that case, obviously the customer would go there. And if once customer go, then to get back customer is a very difficult thing.
Right. Okay. Anything else? So there may be a lot of advantage. One of the advantage we can see is two companies which are very similar. They'll be competing for the same customer, same client. So if you are doing something, they'll try to copy us. Let's say we know their retained earnings, and we know that in the market raising debt is very difficult, and we are trying to acquire a company. So there is a high chance that company will also try to acquire that business, because obviously we might be having a similar strategy, or sometimes they'll acquire the business before us so that they'll get into the market before us. So if you know their financial situation, if you know what's happening inside, I mean, inside can be unethical, but at least some sense what kind of strategy they follow, and especially if they're operating for very long, we can understand what is the risk appetite. Are they okay with acquiring businesses, or are they slow movers? They want to go with organic growth. Do they like debt or equity for finance? Right. So it will help us to react and see the strategy what we can follow. There is something called game theory. In E3 we have touched a little bit. Game theory is all about predicting what your competitors can do, because ultimately to win the customer you have to win to the competitors. Let's say there are 4 players in the market including us. So if you want to win the market, You have to win these 3 players. If you win these 3 players, automatically the clients will come to you. You just have to be better than them, or maybe faster than them, or maybe cheaper than them. Cheaper in terms of price, not quality. All right. So I'll send you that formulas. Please do the ratio analysis and share on the group. Why share on the group? Because other students can also compare to that. It will just take 5 to 10, 15 minutes. And we'll come back to these numbers when we are doing F3 also. Okay. Now the last part of this is the share price. Now, why share price is important? So if you start from the basic, who is the owner of the company? The shareholders. And what does the shareholder wants? Why they're investing in the company? To earn the profits. And how shareholders earn? Can you tell me? How shareholders earn? How they'll return their money?
So dividend and increase in share price.
Very good. Dividends and capital gains, increase in share price. So they want both. They want the share price should also go up and the dividend should be high. But if you see here, broadly, our share price is not doing good. It has come down. Now we have got one more hint. We are just speculating why the dividends were high. So one of the reason the dividend would have been high because, what is the reason? The share price is not doing good. If the share price is not doing good, how you'll keep the shareholders happy? By paying them higher dividend. This is a strategy to maintain. Okay. There is a chance we might have just paid it for this year, or we have just paid from last 2-3 years. Why? Because in last 2-3 years our share price in fact went down. Forget about going up. Okay. So whatever information we have from last 5 years, 2019 to 24, so this is current information. It's not like 31st December 23. Okay. It started with around 70. The maximum we have touched in 2020 was 91, 92, we can say. So overall here it was good. Small fluctuations are normal. No company will see flat, right? Small fluctuations, because many times it's speculation, rumors. Sometime there will be a rumors, and if it is not true, obviously it's rumors, so again the share price will go up. Or certain time if there is an acquisition merger, also the share price will react. If there is a change in government policy, also this will react. So technically we believe when the market is sophisticated, as it is in Barland, and the stock exchange, everything is working as per the norms, the market itself will decide the value of a company. And what is the one of the most important way of valuing the business is the share price. The share price into number of shares. That is the business valuation. So we are doing pretty okay till, we'll say, 2020, but there is a sudden downfall. I don't know what may be the reason. If you see here, from around 80 we fell down to 40, almost 50%. What do you think can be the
So
reason for it?
yes, sir. Same thing I am saying. That so in the exam, the same question can also come there to keep what are the reasons that the share price is going down and what can we do to increase it?
So what do you think can be the reason? You have done the pre-scene analysis. I hope you have got little bit idea about the industry at least. What do you think?
See, after the COVID, there is something
Maybe
lot of
because
happening in the economic sector, that people's purchase power is getting reduced, and they were trying to focus on more, their business rather than giving more importance to the security things.
So you are saying in COVID time there was more need of security?
No. In COVID, after COVID time, 2021 is the period where business were, started growing after COVID. People are out of the COVID, the the protection things and all. So people are at that time of COVID, people haven't invested in business. So after that, they try to more invest in business rather than they were more focusing upon the security things. They were looting money for the operation things. So that might be a cause.
So, sir, in other words, like whatever Devesh is saying, we can say like this also because also the macroeconomic factors means the national income, the GDP is going down. So that's why this is impacting us also. So people are more focused on basic things instead of these kind of things security. So economic factor are there.
According to me, I guess we on the 2021, the Greg become a CEO. So maybe I thinking someone important person left the company and that's why it's affected our share price. This might be the case because whenever the company CEO or top level management, like strategic level people, move the company or if something happen or they just taken down or if someone change the position, then the share price violate a lot because people don't know who is the person, how he will handle the company. So people try to take out their money as soon as possible before they lose their profit or money what they have invested. So this might be the case, I guess. So this is what I can notice from pre-scene.
And so there can be multiple reasons like means new entrance of competitors, as well as there can be reasons of government regulations also, and so such kind of reasons can
There
be
can be a
there.
lot of reasons. So we have to do some research in the industry if there was something which was happening. If we see some real world shares also, if we see there is a downfall, maybe that's the reason. And other, as you said about the changes in the board of directors, definitely it can affect. It can affect the shares.
Sir, here is given a Saefwell share price, but of other competitor is this given? No.
No, they won't give.
So, but the financial are same. So it means that we can say that their share price is also going down. Can we say?
No, we cannot, because in the finance there is no mention about the share price. Yeah, only one small hint is there.
The financial are same. That's why similar.
Financials
That's
are
why.
same, but to conclude on that will be difficult, I am saying. Only one hint is there. Their share price also down because they also paid very high dividend. And usually companies can pay very high dividend. This is how we started the discussion, right? To satisfy the shareholders. Obviously, if it was 50% down, the shareholders will start selling the shares. They might have reached to 80 or even 90. If you see, it was even it touched more than 90 and it came till 40. So it's not even 50%, 60% reduction, isn't it? So when there is 60% reduction, this growth might have take almost 3-4 years, and suddenly in 1-2 month we are reducing by 60%. Means what will happen? A lot of people will start to sell the shares, and once people start to sell shares, again the value of shares will come down. So we need
There
to
are
do.
there is a contradiction. I feel like we are paying high dividend. At the same time, the stakeholders are losing the confidence in the company and selling the shareholder. There is something inherited which we can't see in the scene.
Yes, there may be something. Obviously, they keep this suspense to ask questions in the exam, but we need to be
What I
ready for
believe,
all kind of situation. Sorry.
what I believe, there should be some kind of disaster. It's hinted disaster because if you are paying a high dividend, yeah, usually your stakeholder doesn't go away. They don't sell your. I mean, if I'm getting a proper money back on my investment, why should I sell my share? I'm getting a high dividend paid. Again, I'm losing the confidence in the company. So the reputation of the company in the market is diluted or deteriorated in a very large amount. Then it's some kind of incident happened, which is not there at the moment in the precinct.
Yes, yes. We just
So
have
you
to.
tell us what can be the reasons that like we are paying the dividend high dividend, but still the share price is going down. So what can be the reasons?
I mean, you are paying high dividend and share price is going down. I'm just looking in the opposite direction. Maybe the share price is going down, therefore we are paying high dividend. That is one of the reason. Uh, and we have to just speculate. We don't know exactly. Changes in board of directors can be one of the reason. Maybe we have lost a major client. So what will happen in B2B business? The dependency on the client is very high. If you see recently, Tata Technologies also getting listed, right? It was a part of Tata Motors. So if you do some research, you'll find out they also have 6 to 7 clients which are majority, and many of the clients are giving revenue up to 10%. Imagine losing a client which is giving us 10% revenue. What will happen? Or 15% revenue. The entire business will go for a toss. Maybe last year you showed profit, now suddenly we are showing loss, because this businesses will have a lot of fixed expenses. If you lose 10% revenue, still maybe your cost is the same, operating cost. That will make a major difference. So one hint for the question also, there is a high chance you might get a question of losing the client, because here the client is key player. Individual client is also a key player. Because what happens in a normal business, B2C, business to consumer, that there will be a very fraction of revenue the individual client is bringing to the business. So we don't worry about losing that. We don't want to lose, but even in the worst case, if we lose, they are not our key players. They're not very powerful stakeholders. But in this case, they are powerful stakeholders. That may also be the reason. Then the market macroeconomic issues can be the reason. Change in regulation. Maybe the regulation became very strict because we are attracting people from government authorities, or I would say the emergency services like the police and all, which we see in the news article. There may be a lot of reasons for that. Okay, whatever may be the reason, the questions usually in the exam is focused on how to recover the share price. You need to be ready with some strategy in your mind how we can recover the share price. And obviously we can give a better answer if we know the reason for it, exact reason for it. Let's say a key player of the board resign. So we need to have a strategy to retain the current players, firstly, who are good for the company. Secondly, find a good replacement for that person. If it is for the losing of the client, try to get a new client, or try to retain the current client so that they don't leave, like that. Okay.
Or else we can go to the same client and can give some kind of other things also, some kind of discounts or some other credit periods, such kind of things we can offer to them also, which have
Yes.
left to us.
If they are not left, then we can do it. Imagine if they've already done the contract with somebody, then might be difficult. Then we have to try to get them back. So overall,
Sir, what can be the other ways by which we can recover? Like if there is an economic downturn, macroeconomic factors. So in that case, how we can recover?
so in that case, you have to diversify the revenue. You can go into the new business, new sectors. Like we are not managing the facilities, I just shared. I've been telling so many times that we have to look at the options, how to increase the revenue and decrease the cost. Same thing will work here. You have to find different ways to increase the revenue. If you are showing that, okay, our key client has gone, but still we are able to grow our revenue, which we have done from last year to this year. In fact, if you see towards the end of the year, it was less than 40. And currently it's around 40. And your answer should also be realistic. You cannot say do this strategy and we'll just see the share price from 40 to 80. No. Okay. The next part is the Saefwell's beta. Saefwell's beta is 0.88. So what is beta factor? Again, this part of F3 we'll see there also. But just to give an overview, beta, here we are referring to the risk factor. So usually if beta is equal to 1, that means the risk of the business is same as other companies. Let's say BSG, Broto, and for us is the same, or the industry is the same. But when it is more than 1, let's say 1.2, that means this company is 20% risky. When it is less than 1, so we are saying it's less risky. We cannot say it's not risky, less risky. Here it's 0.88, that means 12 point. So 12% less risky than the industry average. You're not saying that it's not risky, it is less risky. Maybe the entire industry is very risky in this. Out of that also, we are 12% less risk. So who wants to know this data? The investors want to know. The banks want to know. All right, because what happened? Imagine this is 1.5, we are 50% more risky. So obviously anybody who is taking more risk or accepting more risk, what they'll expect? They'll expect a more return. And they're taking less risk, they're okay with a normal return.
Is it possible that this industry, this company is going to be sold out?
Yes, 100% it's possible. Somebody can
Because-
acquire our business, and we can also buy other business. This is a normal thing.
Yeah, because the indication of share price down, you have less risky company in hand, and your profits are intact, your revenues are growing. That means your share price is going down. That probably due to the market rumors that you are going to be sold out. That could be the possibility.
And not only rumors, I would say that it can be the real case also that
Yeah.
company is going to
True.
sell.
I mean, the rumors, I meant to say, because there is no concrete decision or disclosure going out into the market, but there are some news came out. There might be possible. In where I worked earlier in Namshi, when Imar started selling it out, the process to sell it out, they didn't disclose formally, but the market got to know that Namshi is on stake to sold out to noon, and then there are things happening in different directions, like the stakeholder, like the people who are investing money as a supplier, they started going off. They're asking more security of the money. They reduce their credit terms and so on and so forth. So things happen when things are coming into market as a rumor also.
Yes, that is a possibility. So there is a high chance in the exam you might get questions related to share price and dividend, and both are interrelated. That's what the shareholder is expecting. So anything related to that, we should be ready to answer. We'll be discussing this again also when we move forward. But in your research, you can keep this as a priority. Any questions? Divesh has done the financial ratios already. I've shared with you guys. You can also try to do that. I'll share with Mr. Nadeem also. Yeah. Any question, anybody?
So a question is that if the beta factor is less than the industry average, like it's 0.88, then in that case, people would like to invest into that country or no? Because if beta is less means less risky. And if there would be less risk means less return. Or we want, or if we say from the other side, then we want that, yes, the risk should be less. So what people would do, it depends upon the people to person or what?
Obviously, it depends on person to person, or we can say investor to investor. It depends on individual. Let's say, for example, if there is a startup company and they recently got listed. So who will invest in that company? People who are already having other sources of income, they're employed and this is just their saving. They're ready to take higher risk, and even they are not ready for, expecting any dividend for, let's say, 5 years, 10 years. They are doing for long-term investment. But there is another company who is already matured, who is normally giving a dividend every year. They are in business for, let's say, decades now. So people who want regular dividend, who are low riskier, let's say retired people, they will invest in that business. So directly, indirectly, whatever decisions we are making, especially with the dividends, it will give signal to the market, and that type of people will get attracted. For example, now in Zomato, this food delivery company in India, they have investors who are looking for long term. But if you're investing in, let's say, Tata Motors or other companies who are well reputed, you might be expecting some dividends. Okay.
So you mean that people can be risk averse also, as well as people can be risk taker also? It depends
Yes,
upon company to
obviously.
company, person to person. Yeah.
Because if you look at our individual level also, in some things we'll take risk, some things we are risk averse.
Okay, sir.
Please go through
And
it.
sir, in exam, if they want our advice, so we can give the both things. We can give suggestion, means we can give on one side also, other side also, or in the end we should give one side only, or we in the end also we can give both side. I just want to know this thing at the
Okay.
time of writing.
Okay. Let's say if you ask me advice on certain things, right? Let's say you get 2 job offer. I'm just giving basic examples for everyone. Let's say you got one from Google, one from Microsoft, and you are asking me what is the suggestion. And we discuss all the advantage and disadvantages, and we finish the conversation. And I just left it to you. And imagine other scenario, we discuss advantage, and towards the end I said, according to me, I believe going into Google is better because of this, and this reason. And it's your decision to take. Which one will you like better?
Okay.
Which one you like? First answer or second answer?
So firstly, I would give the plus minus of both the companies, and then in that case, in the end I would give that where I would like to go because of the
If you're
reasons
asking a
plus
question to
more
someone,
plus minus.
yeah. If you're asking question to someone, let's say you're asking to me, so you'll like the second answer, right? All of you. Why? Because I have given my point of view. Now it's up to you to accept or not. Because if you're sitting on the fence, you're not showing leadership skill, and leadership skill is important part of CIMA exams. Because when you're at the strategic level, in fact in lower level also they test this skill, but strategic level it is very important. We cannot be a leader if we are not able to take the decisions. Remember, even the best leaders in the world cannot take most of their decisions correct. I was reading one book and it was showing that around 50% decisions are actually turn out to be wrong, even for the best business leaders like Elon Musk and others. But the problem is this leaders, they'll keep on taking decisions. But whereas other people who are not a very good leader, who don't become good leaders in life, they fail to take decisions. Not taking the decision is a bigger problem. You take the decision, you recommend something.
Yeah.
Don't sit on the fence.
Yeah.
According to me, I believe
Yeah.
this.
Yeah. So in the end, we have to go on one side with reasons, right?
Yes, you have to recommend clearly. Then you have to justify because of this, and this reason. And if possible, you can give an action plan also. In very rare cases, you can sit on the fence, but the probability is very, very low. You can say, this looks good, I am positive, but I feel like we should do more due diligence before coming to the conclusion. But you can lose leadership marks in that college. Sometimes what happened, you have got obviously 3 tasks in the exam. In first task, there was a question to buy of a company or not, and you say that please buy this company, and you have put so much of advantages of doing that, plus points. And suddenly when you move to second task, you see the the question is saying that company has decided not to acquire it, rather to go on organic or to acquire another company. So you don't need to get disheartened. Okay, I have said that to acquire, now they are saying we have not. Your answers are not wrong. It doesn't matter. And vice versa can also happen. You said not to buy, and the second situation you will see that they have bought the company. This scenario can happen because the entire question.
Yeah.
1 second, let me finish. The entire question is interconnected. The story will start in the first task, and the same story will continue for the second task and the third task. For example, there are 3 variants. So one of you can get variant about acquisition. That acquisition will be there with you the entire 3 tasks. And some of you got raising finance. The raising finance can be there with the all 3 tasks. Some of you got cybersecurity. It might be with you for the entire 3 tasks. Yeah. Now, what are you saying, Pooja?
So if we have to give suggestion, then we should give means several suggestions, not just one suggestion. This I have read in the whatever notes you have sent.
It depends on the question, because you just have to answer what they have asked. Sometimes students will do silly mistakes. If the examiner is asking advantages, they'll try to be over smart and write disadvantages also. If they're asking debt options, they'll become over smart and write equity options also. They're just wasting their time. Fortunately, there is no negative marking, but they are wasting their time. Only do what they've been asked. No need to do a single thing extra. Sometimes they'll ask a question, highlight the risk. So students will become okay, excited. I know the management also. They're not asking you to manage the risk. Sometimes they'll ask a bigger question. What will be the risk and how to manage? That time you have to do risk identification also, risk management also. If they ask you only identification, do identification. Only management, then they would have given you the risk, only management. The main reason why students have resit in exam across all level is misunderstanding of the question. If it is easy question, they'll write extra. If it is difficult question, they'll write less. And you cannot carry forward time from one to another. I cannot exactly tell you now to give several suggestions. No. Whatever the question, you answer. Simple as that. All right. Now, we have some time left. So we'll just start with the risk. Okay. Why I'm starting this? Because you will have this to do over the week. There are only 10 chapters. Very interesting. Risk management, this P3 has been very important for strategic case study. And in fact, the current business itself is about risk management. So its importance will, even increase in this examination. Very interesting and very practical. We don't need to look at a lot of theories here. We just need to look at the real world examples. You can just look in the examples in your own company and relate to it. When you're revising also, I strongly recommend to think of examples and relate to it. If you do that, that means you have understood it. Okay. So what is a risk? They have given one definition, but I'd like to know from you, if you have to define risk in one sentence, what is risk for you? You can give in personal level, at business level, whatever answer you want. What is the definition of risk for you? Nikhil?
That risk might be some threat or some issue that arise in the future that might affect my performance or my future plans.
You're saying risk is a threat that might affect your future plan. Okay.
So
Next.
risk can be uncertainty regarding the future things. So we have to take the action.
Right. So people might, it's very common to think risk and uncertainty. However, there is a difference between risk and uncertainty. They're very close, but there is a small difference in that. We'll discuss it. Next.
Majorly, hello.
Yes, I'm listening, Mr. Najib.
Majorly, the risk are those things where you can lose your economic scale of economies, where some kind of uncertainties or the situation can affect your business or affect your chances to gain something. Those are the things which called risk, and these are the situations or the uncertainties we need to mitigate.
Okay. Divesh, anything you want to add?
I think, yes, sir. I think that the difference in risk and uncertainty, that risk we can quantify, but uncertainty we can't. So is this?
All right. Divesh?
From my side, I guess risk is the threat. It's threat for the company, that not actually the threat. The risk is that, like, whatever action we are taking, they have two sides. Maybe it will be in our favor or it will be in our like a disadvantage for the business. This is what I think. Like, there will be a two side, maybe good side or a bad side. It depends on how we take a decisions, and also depends on the market environment, whether is it very fit for the environment or not, or how stakeholder affect. This is what I think.
Very good. So basically, risk is a situation. Risk is nothing but a situation where it can go in our favor or in against us. Whatever you said also is very similar. There is no fixed definition of risk. If you see different dictionaries, also different textbook, they might define in a different way. And especially here we are looking from business perspective. So basically here we are talking about a situation for the business in terms of risk, which can go in our favor or which can go against us. And obviously there is a chance of this going against us. Therefore only we are reading this subject. We are trying to manage the risk. Risk is manageable, yes. Can we avoid risk? Almost no. Why? Because if you avoid risk, the return is also avoided. So if you have to get the return, you have to accept the risk. Okay. So risk is a condition in which there exists a quantifiable dispersion in the possible outcome from any act. So the very key word here is quantifiable. Risk and uncertainty is also close. But the problem with uncertainty, in business, we should not take uncertain decisions. We can take risky decisions. Why? Because uncertainties, we don't know how much we can lose. Let's say there are two examples now. Saefwell want to go in a neighboring country where they're already doing business. They want to start their new product or service. And we know that if we win, we'll get this much revenue, or if we lose, that much we have to do. So we have all the information, not all, most of the information. So we know what risk is involved. We can lose some X million dollars. That is risk. But imagine now, Saefwell said we want to go some country in Africa where they have never been, they have not done anything, they don't have any information, no contact, and they want to start a business there. And immediately they want to start. That will become uncertain. They don't know how much money is required, how much risk is involved, how they will hire. So information is not there. But in the first thing, you have an information. So what differentiate between uncertainty and risk is information. And what does information tell you? Information tell you the quantification of that. It helps you to quantify how much we can accept to lose and how much we can accept to gain, which can be flexible, but in the most cases or at a major level, you will have an idea about it. So risk is something which is measurable and uncertainty is unmeasurable. For example, when COVID started in the start, it was unmeasurable. It was uncertainty. Therefore, government was taking a lot of precautions. But over time, after the vaccine and all, we have got enough information and that thing become quantifiable. It is a risk now, still there. But we have accepted. Why? Because we have taken the vaccines. And after vaccine, we assume that, okay, this much chances have been reduced. So what we did risk management. But in the starting, there was no vaccination. We don't know how it will multiply. It was an uncertain situation. So in business, we should avoid uncertain situation, whereas you cannot avoid risk. You can avoid certain risk where you're happy to avoid the returns also. Clear? Then there are two sides of risk, upside and downside. In fact, we can divide into three also. First is upside risk. Upside risk, as the name suggests, is a situation where we are gaining. Okay. For example, you have invested in a share market $1,000. Now the share price is doing better than when you invested. So whatever return you will get now, let's say you just got $100 extra, or you got $2,000 now, 100% extra. So what has happened? Both are upside risk. Either you got 10% gain or 100% gain. That is a situation of upside risk. In business, we can say they've invested $100 million and now they have recovered $100 million, but still there are more revenue to come in from that project. So that is upside risk. Whatever we are returning in a positive becomes upside risk. And same thing on the opposite side is downside risk, or it's also known as pure risk. That means we are losing. We don't have anything to gain from it. Let's say there is a cyber attack in the business. Can we gain anything from it? No. Pure risk. Our board of directors have caught in some problems. Let's say they're unethical, or maybe we have lost some of our director. They just join our competitors, or unfortunately somebody got any serious disease. They cannot work anymore. That's a downside risk. We got a fire in our office. Downside risk. Right? A situation where there is nothing to gain. There is pure downside, pure risk. It is a downside risk. And third one we can bring in is speculative, which is close to upside. Why it is called speculative? Because during the start, we don't know it will go which side. It can go upside also, it can go downside also. When you're investing first, when you're launching a product, when Samsung launched their foldable phone, I think it was how many, 3-4 years back, it wasn't a success. It was very expensive also, and ultimately that speculation went to downside risk. Now again they have launched, but a little economic version. I think it's doing okay. I'm not sure the numbers, but when you launch something, it's a speculation. That's a speculative risk. It can go up also, it can go down also. How the chances of going up, upside risk is increased because we do risk management. How we reduce that risk going down because of risk management. That is speculative. Okay. Any question? Yes, no? Okay.
No, sir.
I have a question for you. In speculative risk, it makes sense. It can go either way, so we have to manage risk. But why do you think we need to manage downside risk? Because already we are losing. Already there is a problem. And when I say manage risk, it comes at a cost. You have to invest so much of money, so much of resources, so much of time. And in upside risk, you're already earning profits. You're already that thing is happening in your favor. So why you want to manage upside risk also? Because here you're gaining. Doesn't make sense to invest more money and more resources. And here you're losing some kind of thing. So why you want to manage this risk? Speculative is understood, straightforward to work in our favor. But in an upside risk situation and downside risk situation, why you want to manage risk? Why risk management is important?
Sir, in case of downside risk, it would later on impact the complete means the complete returns. If we don't manage this, it would affect the upside risk also. So that's why.
How it will affect upside risk? Can you give an example?
For example, one of our business is not going good, so it's a kind of pure risk for us. But we are getting losses uh, into this, and we are using our resources here also. So we can use those resources in the other side. Means we can spend those money as well as people on the different side. So in that case, it would impact. Means we can grow in the upside this side. So it would impact that.
Okay. And why you want to manage upside risk, Pooja?
Um, so because um, if there would be less risk, then it's beneficial for the company for future growth.
Okay. Yeah, makes sense. Others?
For me, downside risk needs to be managed, shouldn't be avoided at all because there will be some risk that can be easily managed or transferable. Suppose if we have health and safety risk, which is very highly risk for our, we can put some control and try to our best to train our employees to deal with very risky areas and all, so this will be a very easy to transferable or mitigable at certain point. But yes, there will be a downside risk. Maybe if something very risky happens, someone can lose their life as well. So it's very necessary to look into the downside risk. We can say we should try our best to evaluate the downside risks. I know there will be some risk that will not be able to like mitigate or able to transfer at all. At that time, we can avoid. For example, in prison, they have also mentioned that they are trying to avoid some very highly risk related work to safeguard their employees. So this will be the case. This is how they are transferring their risk and mitigating risk from safeguarding their employees.
Okay, makes sense. Mr. Nadeem? Nikhil? Hello, am I audible?
Yes, sir.
Yes, Mr. I was thinking.
So whatever comes to your mind is fine. Okay, no problem. So firstly, speculative risk, I think you have understood. Now, if you talk about downside risk, why we need to manage downside risk, pure risk, is because the answer is simple: to minimize the loss. If there is a loss which is already happening, will you just leave it to keep on happening? No. Let's say you have invested some amount, X amount, and you have already lost 50% of that. You need risk management to save the other 50%, isn't it? So minimize the loss, we need downside risk management. If there is a cyber attack, also we'll try to safeguard the remaining information from the hackers. If there is a fire, we'll try to reduce the fire, call the fire brigade, and safeguard other raw materials or inventory in the business, isn't it? So the management of downside risk is primarily to minimize the loss. Losses happen, we accept it, but to minimize it. Same thing for upside. We are gaining. Let's say we have got 10% profit, but our aim is not to get 10% profit. We want to get 100% profit. We want to get 50% profit. Multiply it. To maximize the return, we do upside risk management. And to minimize the losses, we do downside risk management. Why we do investment in training? Because it's upside risk. It will improvise our employees. It will improvise their performance. And why we do background check, fraud identification, all of these policies? To minimize the downside risk, to minimize the losses. Make sense? For example, compliance risk. Compliance risk is a downside risk. If you don't do, definitely it will affect. But still, you might have seen certain companies, they might lose certain compliance. Maybe because they are late and all, but that doesn't mean they won't manage the risk. You have to do it. And same thing with upside risk. If you have a good product which is into maturity, so you have to get a good profit out of it, generate higher revenue. It's a cash cow for the business. All right, makes
Sir,
sense?
a question. Sir,
Yeah.
as you said that the cash cow for the business, so can you give us like few models name which we can remember? Means few important models name. Means-
All the models that is important is part of this E3, P3, and F3 notes. If you do, that is enough. For example, now we have done E3. I hope you remember the E3 notes. Then in P3 and F3. Firstly, remembering and recommending modeling exam is not mandatory. If you want, you can do it. I'm just doing for the understanding. And the names have already been given in this material. I've added all. Okay.
Okay, sir.
All right. So the last part of today's class, we'll just discuss this and close it. Risk management cycle. So basically, this is a cycle. Firstly, why it is called a cycle? So cycle is something which is continuous process. So risk management is also a continuous process. We cannot say that last year we have made a risk profile, we have designed our internal controls and everything for the business. We can just leave it this year. No. Even for that same year, you might have to change after 3 months, after 2 months, depending on the company's policy. Why we need to do it? Because what risk companies faced last year is totally different. For example, 5 years back, cybersecurity risk or cyber risk was not number one for the companies. But now, even small and medium businesses, for them, cyber risk is number one, or at least in top two, top three. Why? Because every year, due to macroeconomic situation, internal situation, the risk of the business will change. Now we have two companies, Saefwell and our competitors. Both of us will have external risk same, but internal risk will be different. So risk need to be a cycle. Risk management need to be a cycle. Why? Because the risk is also a cycle. It is constantly changing. So when the risk is constantly changing, the risk management should also constantly change. Right? So in order to make a risk management cycle and everything, first we need to identify risk. So what are the ways business face risk? I mean, these are not final, but this is a good starting point. So first kind of risk Saefwell or any business can face from the strategy they are choosing. What business strategy they are choosing? For example, if they want to acquire a business, it will give some return, but there is a risk also. For example, Byju's, if I give Byju's example, Byju's strategy was about acquiring so many businesses. If you see what they did with most of their raised money from the venture capitalists, they invested in acquiring the business. And what happened? Most of the business went in loss. For example, White Hat Junior and all they acquired, and it never gave them good profit. In fact, they are running losses. So majority of the risk came from business strategy. Well, taking any strategy, the board will accept certain risk. And obviously, when I say risk, it can go against us also. So business strategy will give us risk. Second is establish risk management group and set goals. So what is our mission, vision? If we want to grow, let's say now Saefwell is number 2, we want to become number 1. So we have to take a lot of risk. We have certain policies and certain things to follow that can also bring certain risk, right? And there are some normal risk which is across the businesses. So these two are the majority areas where risk can be coming to the organization. There may be other areas also, but these are considered major. So once we identify the risk, let's say we have got 50, 100, whatever number of risk, we have to understand and assess scale of risk. No two risk will be same. For example, a finance manager is leaving the organization, a middle person, and a CFO is leaving the company. Both have resigned. So we don't need to worry much about the risk of finance manager, easily replaceable. Is it a risk? Yes. But the impact will not be that big compared to a CFO or compared to a CEO. Therefore, every risk need to be assessed. How we assess that? Likelihood and impact. Most important is the impact. We will see in the later section. If there is a change in government also, there will be an impact if you're dealing more into import-export business. If there is change in policy also, it will impact. So assessing is all about seeing the impact. Certain risk will impact us more, certain risk will impact us less. And why we need to do the assessment? To see what should be your response to the strategy, development of risk response strategy. Because if it is a minor risk, you will not spend so much time, money, and resources. And if it is major risk, you cannot just take it lightly. For example, Paytm got an issue with Reserve Bank of India. So their response strategy should be, I mean, they're still going through a lot of scrutiny. It should be first priority. So how we'll develop a risk response strategy? First, we need to assess the risk. Next, implement strategy and allocate responsibilities. It's not only about developing a strategy. For implementing, you need a team, you need a resources, you need a proper plan, you need to give responsibilities to the individual in the team. All of this need to be done. In different department, different section, we'll have different responsible person doing that. Sometimes it will be the same person, sometimes you have to hire somebody, you might outsource some of that. Next is implementation and monitoring controls. Once implement strategy is done, implementation, we have to see how it is happening on ground, basically in application. Then controls. What are controls? Controls are basically a proactive way of managing risk. Internal control, what we see, right? For example, we do segregation of duties, we put CCTVs, we put physical security, all of that are control. So we have to see how the controls are working. Are they effective or not? That is implementation, monitoring of monitor how effective it is. And obviously this will be done for all the risk in a different way. Once it is done, we cannot just say, okay, controls are working good and all. Still there might be some times it's not effective, or maybe the risk itself is changed. So therefore we have to review it, refine it, process it, and do it again. Again, the risk will change. Identify new risk, understand, assess, develop responsibility, so this cycle will keep on going in the business. So this is called risk management cycle. And while analyzing this, we can make business decisions, information for decision making. So this information is obviously focused on risk, not other type of the business. I mean, other areas of the business. So this will help us to understand what is the risk profile of the business, how we are dealing with the internal risk, how we are responding to the external risk, how we are finding new risk in the business. All right. Any questions?
No,
All
Mr.
of you have understood the cycle, how it works. It's very logical and simple.
Yes.
It's just step by step, step by step. They'll not ask you in exam to explain risk management cycle. And they have not asked directly before also. In the worst case, they can just say, what are the advantage if Saefwell implement risk management cycle. So whatever logical advantages you feel like, you can talk about it. And even when you talk about advantage, you have to apply to the Saefwell. Therefore, theoretical aspect is very low in your exam. It's all about application, application, and application. Okay. Then we'll see this categories of risk and everything. Any questions?
No.
All right. So that's it for today.